Hello, everybody. So, today we're going to talk about discount and premium. So, we're going to see how price reacts from discounts and how price reacts from premium and what kind of setups that you guys can look for. What are the narration that you can go through if market is in a premium or maybe if it is in a discount. All right. So, today we know that in a simple structure way that if we have a swing, then if we take the high and the low and the midpoint is a equilibrium, that's a point 0.5. If you have a Fibonacci, you can see here 0.5. You can pull out that 0.5 line. It will divide the swing to the premiums. So from here to here, it's a premium, and from here, the lower half, this is a discount. All right, so we have a premium and we have a discount. So if price is in hovering around in a discount, what to do, and what if price is hovering around in a premium, what to do, right? So we're gonna see the structures and how price do their rebalancing, the price supporting itself, what are the key levels now. So we're going to go through the system and its process. All right, so we are in higher time frame. This is 4 hour chart, so we're going to choose one swing. All right, so let's say we have a clear swing from this high to this low, right? And we are right now here, so we're going to look where we at for this swing. So this is the high and this is the low. All right, so we have high, low. This blue line is a midpoint. That means this is equilibrium, and equilibrium is a price level where you can expect a consolidation within the swing. So for this swing, if price is within the midpoint of this swing, that means you can expect consolidation. That you can see here. This whole phase is consolidation, right? So you can expect price to consolidate, and right over here too. So let me highlight this so we can keep that in. Okay, now, so this is the high, this is the low. Nothing has been taken, so that means we have open swing high, liquidity for the buy side, and liquidity for the sell side, open to the downside, right? So price is basically within the dealing range, this high and this low. Nothing has been taken out. So what we also know is if price is in the 50%, then we can expect in the 50% it can consolidate, right? Over here and over here you can see. So these are the study. All right, so if you break down this 50%, so this low and this as a high, right? So you have 50%, you can again see consolidation over here. So this whole range is basically a consolidation. Why? This consolidation is a reason why price is not moving. So that means you see this, we have a high and the low, and then went to the 50% of this whole dealing range right here. It consolidate and it broke down, but when it broke down to the lower side, what happened? We have now new high and the previous low. So low and the high. So if you take this as a dealing range now, because price just broke down, right? Price broke down. So that means you have a high and the low. If you take that dealing range, this is 50%. When price came to the 50%, what you can expect now? Consolidation. See? So now, is this high been taken or not? So let's check this. All right. Let me remove this. Remove this. Okay. So this is the 50% of this small dealing range For this bigger dealing range, this is the 50%. So you have consolidation here, consolidation here. So let's check if this high is still valid or not. So no. You can see how price purged a little bit higher than this price, this liquidity. So that means you have a new high, right? Now if you have a new high, now this previous low is not your low now. The previous low is this now. Okay? And your high is this. So this low, this high, 50% is right here. And this is your previous low, right? So what's the dealing range now? So the dealing range is this as a high and this as a low, right? And for this dealing range, this blue line is a midpoint. That means you can expect what? Some kind of consolidation. It is also happening right here. You can see 3-4 hour candles are still consolidating, right? We are in the 4 hours. So see how price is not moving because we are in a high time frame. It's a 50% of this high and this low. This is the dealing range right now. And you have 50% right here. So you can expect what? Consolidation. So until it breaks through the consolidation, either this way or that way, you have not clear direction right now because it's consolidating. So you want to see what? A manipulation, right? So if it is consolidating, that means it's accumulating. So you want to see first hand of the market price. So that means if price is consolidating right now, what do you want to see? A manipulation, right? So if price is consolidating, I want to see price to give you a first footprint as a manipulation. So if you come through this way, then what you can expect? Distribution to this way, right? If price consolidates like this and then it manipulates higher, and then what do you expect? Price to go lower, right? So until price gives you a first hand as a footprint, you cannot anticipate the third one, second one, right? So for now it's a consolidating. You want to see a first hand, either manipulation or directly to the expansion. So if it is going to the expansion, you want to make sure it breaks all the way down to the liquidity that is in the dealing range, or that decides that has become a dealing range. So this low is a part of dealing range and is a low that has created a dealing range up to this high. So this low, this high. So if price is expanding down, you want to see what? Price to come all the way down to take this. Okay? So that's your expectation from the price. So, and if price gives you accumulation and then manipulation to the upside, rebalancing this imbalance, and if price try to come down, that means perfect because you have accumulation, you have manipulation to the upside, and then what do you expect? Distribution to the downside. But just because you have low, no. We also have high, so you can still expect accumulation, manipulation to the downside, and then distribution to the upside. But let's put a narration within the dealing range now. So this is the low, this is the high. So we are in a higher time frame, that means 4 hours. That this dealing range is enough to take trade for the lower time frame, right? You can go lower, but you don't need dealing range from weekly or daily, right? You can just take from 1 hour to 15-minute to for the dealing range. That means you're working within the range. What is the range? You have this high, this low, right? So now just think couple way, all right? Let's think this way first. What do you see here? From this daily range, from this low to the high, you have clearly seen that you have accumulation here, right? So you have accumulation right here, and then what do you have? Give me a second, let me color it differently. Okay, accumulation here. So what might be this as prices right now here? So you know this is a manipulation, right? Accumulation, then manipulation to the upside, and see how it came all the way down, rebalancing the whole manipulation move. That means it is now ready to distribute, but it is also within the 50% of the dealing range. That means it can go to the consolidation in a small time frame that is going on here, the 4 hour, 4 hour, 4 hour candle, 3 candles right there. If we go lower, if we go to the lower time frame, let's say we go to 15 minutes, see, we're in a consolidation, right? So until we get a good manipulation, you cannot expect a distribution. All right, so you should not expect it can do whatever it wants. I mean, going through the accumulation directly to the distribution can happen, right? But you want to see the first move, and it should be clear. All right, so let's go through the 4 hours, so we'll get a clear answer. All right, accumulation, manipulation, distribution is now what's happening. All right, so if this is a distribution leg, so that means anytime it can just break lower, right? If you get to see manipulation in the lower time frame, perfect, that you can now anticipate again to the distribution, because you just witnessed manipulation. Now it's going to the opposite direction and direction of distribution. Okay, so in a bigger time frame, it's 4 hour, it's accumulating here, manipulating here. This is the 4 hour distribution. So this low is very, very important to see, because this has become a POI, that means point of interest. Why? The also major reason is that we have these liquidities that's sitting below. You see, this, right? So these two smooth lows are very open and ready to be chopped, and if price gets more power with the liquidity like this, that means price can easily come down and take these lows, and with those it can all the way go all the way it can go all the way down here, right? So now let's see this swing, right? So you have this high, this low. Now again, you can expect, if price goes over here, you can expect what? Accumulation here, right? And then again, in a lower time frame, right? You won't see accumulation in a higher time frame now, okay? Because this is not a big dealing range for a higher time frame. All right, so for a higher time frame, it might not just be a consolidation, it's just a one candle, 1 4 hour range, or just a wick. But for the lower time frame, like 5 minutes, 1 minute, you can see a consolidation right here. That means go to down here. If price manipulates to the upside, and we also know the higher time frame is telling us that it's going to distribute to the downside, that means what? If price accumulates and then manipulates to the upside, and again it shows you lower time frame accumulation, again manipulation to the upside, distribution to the downside. This distribution will be the biggest distribution you will see, right? Why? Because it is going through the phase from higher to lower with a sync, in a sync, right? So that's how you can narrate a dealing range, and that's how you can connect a accumulation, manipulation, distribution, and you can find what's very identical and what you can expect from the price, because then you know where we at, right? So now let's also look through the premium and discount. All right, so let's go to the 1 hour. Let's see here. So further again, go to your chart and put on a higher time frame, and when you see the swing, a clear swing, that means you can just draw a 50%. That means it would just tell you in a higher swing this price, where this price is in a discount, right? So until there's it's something interesting here, it cannot. I mean, let's put it this way. This part is premium, right? The upper part. This is premium. So this price range is in a premium. And now it came to the discount. And let's say you have a key level over here. Let's say anything. Let's just say these. Okay. Let's say you have a key level over here. This is a manipulate. This is a price which was in a premium. Now, price is in the discount for a bigger swing, like bigger swing. This dealing range, this high and this low. Price is in the discount, right? Now, what do you expect? If price is in a discount, what do you expect? Price to go to the premium, right? If price is in a premium, you expect discount. But if it is so, it will just go up and down, up and down, up. No. There's something that clarifies more, right? So what I'm saying is, if it came from the premium to the discount and now it's in the discount, and we know if price is in a discount, we expect price to go to the premium. That means if when it came to the discount, if there is a key level that can push price higher, that is better entry, right? Because you are in the discount with a key level, and now you know price can easily go to the premium because it's in the discount. Correct? And what else can be more important? For this price, what is the dealing range? This high and this low, right? That means you can draw this as a low, this as a high. If you draw this, what do you see now? Where is the price tapped into? Discount. Where it is going to premium. So it tapped to discount, go to the premium side, rebalance the imbalance, and possible, then it will go to the premium. That means above this 50%. And if you see any key level in that premium level, that means yes, okay, we are in the key level in a discount, which is this breaker block. This low has been taken. This is the breaker. But if you see this low has been broken, you can draw. Oh, wait. So if, no, okay, this is not a breaker, right? Give me a sec. This low has been taken out. That means you have this breaker. So for higher time frame, I'm just gonna go with this single candle. So we are in a breaker. It tapped into the discount, and now it is willing to go to the premium, and it is in the premium for this smaller swing, this low and this high, and this is a premium for the bigger swing, which is this high and this low, right? And if you can find something that aligns within this premium, that means you have a PD array that's a 15-minute fair value gap, and it is respecting all the way through the breaker. This one, the price is in the breaker, but also to keep in mind, it just tapped in the discount, taking a support from 50%, that small swing, and now heading towards a premium of a bigger swing. It was already in the premium, so it was the obvious thing, this, right? So price can reach up to this, correct? So is this the entry model? No. What can be the entry model? You can dip down, right? You can go and look for the perfect manipulation. If it is willing to go up here, right? So what do you want? If this is accumulating, you want something to manipulate, right? And then you want some kind of distribution. And then again, for the higher time frame, this is accumulation. A higher time frame is saying price is going lower. That means the distribution is to the downside. Before the distribution, what do you expect now then? Manipulation to the upside. That's what you are watching here. If price gives you a manipulation for this small accumulation to downside and then distribute upside, then for the bigger range, this is a manipulation, right? And then distribution to the downside. And the distribution is now also for this smaller piece and then also for the bigger piece. All right, so that's how you can narrate things. So how to see where we at is by taking a reference from high and the low of the dealing range, and you can decide if we are on the 50%. That means you can expect consolidation until it breaks and take support of that 50%, or price is in the discount, right? Manipulates and distributes to the premium to any PD area, maybe here, right? And then you can again anticipate from that key level because it came to the premium, and then you can expect price to go to the discount and look for what kind of phase are you in: accumulating, manipulating, or distributing, right? So if you go through all those things, it will be very easier to navigate and narrate, and I hope it will be helpful for you guys. And let me know if you have any comments, if you have any feedbacks, or say any questions. Then yes, chat me into the free Discord chat, and then we can talk over there. Otherwise, yes, make sure you are not really been chopping out your accounts with this high resistance liquidity run too much. All right, if you see good little expansion moves, then you can anticipate, but you should expect beforehand. If you're not expecting and it suddenly happens, and just because of that you want to enter, then nah, it's not gonna happen. All right, so expect beforehand, as if because and you can know. That's the thing. So all right, guys, that's for tonight. And I know I'm not been very consistent with my YouTube, but yeah, I've been busy and been not feeling well since a couple of days. So I'm trying to push a little bit more, and then we'll talk soon. But till then, good luck and good trading. Bye bye.